Thing number 4, we're checking in with GDP, high GDP and rate cuts with a question mark there at the end.
Yeah. So second quarter GDP came in at 2.8%. That's a solid number on both an absolute and a relative basis. 2.8% growth, that's not bad. Um, the estimate was for 2% growth, so 2.8% crushes it. So do we have a healthy economy? Is everything okay? What do you think, Rob?
I don't think so, and I think what we have is a bifurcated economy,
There
if
you
I've been
go.
picking up on the keywords and
Yeah,
buzzwords
you
here.
you you nailed it. Um, basically,
Don't catch me off guard like that ever again.
sorry. Yeah, it was a trap. It was a trap. Don't fall for the trap, Rob. Um, look, if you're listening to this video and you're struggling at home, we understand that. And there are a lot of people struggling right now. I don't actually think the economy is in good shape, the private market economy. And so if you're having a hard time, I believe you. We get that. And that's what we're seeing as well. The reason we got this good GDP print is because of massive amounts of government stimulus spending. The government is overspending by, 2-3 trillion dollars a year. That's just the on balance sheet numbers. If you include off balance sheet for programs like Social Security, Medicare, Medicaid, Obamacare, all of these pensions, all of these benefit programs where we're incurring liabilities but not necessarily paying them out now, add another, 6-7 trillion dollars to that. So we're overspending right now by somewhere in the neighborhood of like $8 to $10 trillion a year. Of that, you're looking at maybe $3 trillion a year of cash. Um, that is a massive amount of government stimulus spending, and that will affect GDP whether it creates value or not. And so, think about this for a minute. If the government were to say, take $1 trillion and fix our roads, well, that could be productive. They were going to take $1 trillion and, build bridges, repair bridges, improve our transportation infrastructure. These would all be things where we could look at that and say, okay, yeah, I get it. I get how we're investing. But that's not what's happening. The money that's being spent is pushing out private market investment. It has a negative return. It's all on pulling consumption forward. Rob, think about it this way. Try to imagine if you're making a certain amount of money and you decide, yeah, I'm going to work less. I'm going to earn less money, but start spending a lot on my credit card, and you start to accrue all of this debt. Is your household economy in good shape? Absolutely not. But that's what the country is doing. And what people are starting to realize is that the government has a balance sheet just like each of our households do. And that's what's happening. And so, what I'm seeing is that 2.8% print. That's great on an absolute basis. It's fantastic on a relative basis, relative to expectations, but it doesn't mean that we have a healthy economy. It just means the government is printing huge amounts of fiat, huge amounts of dollars, and pulling forward consumption, and that's not a great economy. And so if you're struggling at home and saying, wait a minute, how am I being told the economy is in good shape? That's how the economy is not in good shape, is just government spending pushing out the things that you would be doing to earn a living.
Yeah, great message there that everybody needs to hear. Gary, we have September rate cuts coming up. The market has kind of baked in a 100% probability. What line would I be getting from Gary Brode Casino if you were to set that line for me?
Well, it's easy to take the under on 100%. But look, let's be clear on this, Rob. On one hand, the market has been wrong for over 2 years. People started calling for rate cuts around May or June of 2022, which was ridiculous. I've spent the last 3 years saying, it's going to be higher for longer. We started talking about inflation in November of 21. And when people were calling for rate cuts in mid 22, I flat out said that's ridiculous. But we've now gotten to the point where the entire market, and the market hasn't been predictive on this. The market has been wrong on all of these, but now we're at the point where some really smart people who I respect, like Michael Shedlock, who's an economist, he's on the DKI board of advisors. He thinks there's 100% probability of a September rate cut, and he thinks maybe not 25 basis points, that the Fed could go 50 basis points. Um, Mish is somebody I respect, and there are some other people as well. Danielle DiMartino Booth, who's somebody I respect on the macro side. She thinks we're already in recession, which I agree with on the private market economy. So there are a lot at this point. There are a lot of really smart people saying we're heading for rate cuts. At this point, it's possible, but it's pretty easy to take the under when people are saying 100% probability, because you can't take the over.